Hey guys, I'm Kenya Horton and welcome back to another training video. I'm super excited about this one because it's long overdue. But in this video, I am going to show you guys how to win more trades using market structure. So whether if you're a new trader or you're an existing trader, this is going to be an entire playlist showing you exactly how to find high probability setups using market structure. But the very first thing that we have to do is understand what the heck is market structure. So I'm going to go through that, break it down really simple, show you how I approach the market, and then I'll show you what the next video is going to be on. Go ahead and hit the subscribe button. Make sure you come back and look for the playlist on market structure, and we're going to go ahead and dive in. So make sure you pause this video, take notes if you need to. But the very first thing we have to do, guys, is understand exactly what market structure is, identify it, make sure we understand it, and how to spot that on a chart. So when you hear the term market structure, don't let it confuse you. It simply is just support and resistance on a chart. That's it, guys. You're going to hear higher highs, higher lows, lower highs, lower lows, swing highs, swing lows, pullback, history. All of that is considered market structure. And why is it important for us? It's important because it provides us with potential trading opportunities. So in an uptrend, if we were going to approach the market and get long, we need to see a few things. So if you are an IMO customer and you're using, for example, the web analyzer, and the web analyzer calls a buy on GBP JPY. Well, in order for you to enter that trade as a buy, you need to confirm a few different things. You have to have a very strong confirmation entry checklist, and just using market structure can help you strengthen the outcome of your trade. So in an uptrend, you want to see a series of higher highs, higher lows, higher highs, higher lows, higher highs, and higher lows. This is a pattern that you're going to see in the market. Price is never just going to drop straight down. It's never going to shoot straight up. It's never going to trade sideways forever. It's going to move in these patterns. And when you're looking for a trending structure, especially in an uptrend, this is the series that you need to see. In a downtrend, you need to see the opposite. You want to see a series of lower highs, lower lows, lower highs, lower lows, and lower highs. So one of the very first things that I do is I go to the higher time frame. That is your number one rule. When you are spotting market structure, you want to analyze on the higher time frame, preferably the 4-hour and above. And then you want to identify a trending structure. So I'm going to do this right here on this example, and then I'm going to take you to an actual chart. So what I do in an uptrend, I just look for my little peaks. So you want to look for your swings, and you basically just want to go through and connect them. Okay, this won't be perfect, but we'll try to get as close as we can. So I'm just going to take my trend line and I'm just going to connect it to my little swings here. You see that? My swing lows. And then if I click on this trend line, and I'm using TradingView, if you hover over your icons at the top, click on clone, it will copy that trend line, and all you want to do is connect it to the other side of those peaks, all right? So this is going to be your resistance right here. So you see that? So now I have what's called a channel. Price is moving within this channel, and there's a few things that need to happen. So I've gone through rule number one, where I started on a higher time frame. I analyzed on, let's say, the 4-hour. I usually do it on the daily. So you're going to find market structure on every single time frame, but you want to analyze on the higher time frame because you're going to get a more accurate analysis, more accurate picture. Plus, when you're able to capitalize off of these entries off the higher time frame, you're going to have bigger moves. Now, if you're a short-term trader like myself, you might analyze on the 4-hour and make your entry on the 1-hour or even the 15-minute if you want a really tight entry. You'll figure it out. You'll have to test it for yourself. But I absolutely love it. I do some intraday trading too, and it absolutely works. So let's go do this on an actual real chart. And after we have identified our trending structure, I'm going to show you how we find our major levels of support and resistance and how I would take an entry into the market. Now, keep in mind, I'm not using any indicators at all. I started out as an indicator-based trader, And as I advanced my knowledge and started to master market structure, this just became really, really easy for me, and it increased my profits because indicators bring you to the market. It brings you to the market late, but market structure brings you to the market early. So the very first thing that we're going to do, remember our rule number one is we want to start on the higher time frame, 4 hour and above. So let's say that if we were going to possibly enter GBP, JPY for a buy, well, we want to see that the market is making a series of higher highs and higher lows. And we need to see at least 2 points connect, okay? So what I would do is turn this to a line chart. This is exactly what you want to do. You want to grab a trend line, and then you want to find the lowest low or the highest high. So since we're in an uptrend, we want to find the low. So this is our low here. You see that? So all I'm going to do is I am going to connect peaks with my trend line. So these little swing lows here, all I'm doing is connecting it with my trend line. You see that? And all I'm doing is just running it through. So if you do that, and then if you hover over here, your fourth little icon at the top on TradingView, click on clone, copy, click on clone. It's going to clone that trend line for you. And all you have to do is move it to the other side and connect those other peaks. You don't want to force anything. It's okay if price push through, but you basically want to rest your trend line on these little peaks here where you have multiple touches, okay? So after you do that, you then want to change this back to a candles chart, and you'll see that price pretty much is respecting this channel here that we created. And how do you know that you have a valid trend line? Well, you'll see wicks pushing through your lines. So see, we have a wick here, we have a wick here, we have a wick here, and a wick here. Price push through here, that's okay. But this is how you know you have a valid trend line, okay? So remember, always analyze on the higher time frame. You want to identify your trending structure. So if you're entering in a buy, then you need to see that the market is making a series of higher highs and higher lows. Now, what I do quickly next is I identify my support and resistance. I want to identify major levels of support and resistance. So what I do is I turn this to a line chart, and sometimes I'll even go out to the weekly, because I usually, well, let me just go to the daily, and let's see exactly where I was. Kind of lost it though. Here we go. So I will go to the daily, or you can do it on the 4 hour if you want, but I'm basically just looking for areas of support and resistance where the market has respected an area, where price reacted off of an area multiple times. So for example, if I wanted to go back to the 4 hour time frame, I definitely could. And this is going to help me with my entry and my exit. So again, I will mark a zone at the low, okay? And I'm also thinking about, what if price were to suddenly reverse and break this trend? Where would it possibly test to next? So if you look left, you'll always find clues when you look left, and you'll see this was the previous swing low. So sometimes I will mark another zone area here, just so that I'm mindful that if price does break this trend line, that I know possibly where it's going to test to next. So I keep going. I don't draw a lot of lines or zones on my chart. I basically focus on where price is at the moment. So let's say if price was within this channel right here, right now, my next area of support and resistance might be somewhere right in here. And again, right within here. And the reason being, if you turn this to a candles chart, you'll see that price reacted off of these levels. You see that? So let me show you an example right here. Every time price approached my trend line here at the top, what did it do? It bounced off of it as an area of resistance, okay? And you'll see that again here. It bounced off of this trend line as an area of resistance. And what did it do here? It bounced, it actually pushed through a little bit through the trend line, but it wicked. And wick tells us a story, right? It tells us price rejection. It tells us that price possibly wants to turn around. So if you are wanting to get long, for example, in an uptrend, you want to think logically, where would be a good place for me to buy if I was going to buy GBP USD? Well, obviously, if you're in an uptrend, you want to trade with the trend. So you want to, what you're going to see, I'm going to give you 3 rules right now. So 3 rules that will really help you increase your wins is you want to follow something called an impulse, a correction, and a continuation. It's a 1, 2, 3 cycle that works. And if you just follow it, you're going to notice it on every time frame, okay? So for example, here you had an impulse. So when you have an impulse, you have a sharp move. It can be a sharp move up. It can be a sharp move down. You're going to have an impulse followed by a really brief correction and a continuation. So do you see that? Let me just point that out for you. So for example, you had an impulse, okay, followed by a brief, you can call it a reverse, you can call it a temporary, we call it pullback, we call it retracement, we call it correction. It's all the same thing, all right? And as you can see, it pulled back to this structure level right here where this area of support was previously support, became resistance, also became support again. So as you can see, price has reacted off of this level here multiple times, okay? So we had a brief consolidation period here, and then what happened? Price continued up, all right? So you're gonna see this 1, 2, 3 cycle all of the time, and that's gonna help you as well too. But if you wanted to get long in an uptrend, the most logical place for you to enter is going to be on a pullback or on a correction. And preferably, I would want to enter right here off this trend line, okay? Because as you can see, every time price approached the top of our trend line or the bottom of our trend line or our channel, what did it do? It reacted off of it. Now, we are mindful that price could break through it, but if we look left, we can always find clues to see possibly what price will do. So if you have a break in structure, all you're going to do is you're going to do the same thing, okay? So I'm just going to show you. You're going to do the same thing every single time, guys. So as you can see here, this is how you know when you need to change your bias. So if our bias is long here, which means we're buying this market, how do we know when we're no longer buying anymore? When do we stop buying? Well, let's just point it out here. So if we see that we have a low, a high, a low, a high, a low, so this was our low. We have another high and we have a low here. So let me show you. We have a low here. You see that? Well, once price broke out of this trend line and it basically broke below this previous low, we had a violation in structure. So if you ever hear that structure has been violated, that's exactly what we're talking about. So for example, if I just move this line up here to show you, so you see that? So basically when price broke out of this channel, this low is lower than this previous low, which signals to us that price possibly wants to change directions. So what do? All you have to do is do the same thing again. You would take your trend line, and if we wanted to look for a possible setup, we would just go ahead and mark our trend lines. And if you want to change it to the line chart, you can do that, okay? So if you want to bring it down to your line, and remember, we're just going to connect our peaks. That's all we're doing. And then I'm going to clone this. So if you click on it, and then if you clone it, and then connect, we're going to connect this to our bottom peaks there. Let's get rid of that. So we're going to connect it to our bottom peak. See how perfect that is? See how price is resting within this channel? That's exactly what you want. If I change this to a candles chart, you'll see that wicks are going through the line. So that's how you know you have valid trend lines. So what do? Usually when we have a break out of a channel or a break from support or resistance, we look for a retest to enter. So what we could have done, instead of getting right in when price broke out of this channel, we could have waited for price to pull back to this trend line. So this could have been a possible entry for us to get short briefly. Okay, so that wick right off of there. We could have entered there for, some quick pips here, or just stayed in this for a little bit. And then right at this trend line could have been our take profit level, or you always look left for clues on how to take profit, but that's going to be our next video. Okay. So again, the very first thing that you want to do when you're identifying market structure, you want to start on a higher time frame. You need to analyze the 4-hour and above, preferably the daily. Sometimes you might have to scroll out to the weekly when you're trying to look for areas of how to take profit. So when you have a trending structure, you're going to identify that trending structure. Now you can combine other things with this as you get more advanced, where you can add Fibonacci levels, you can add moving averages, but you really don't even need all of that, honestly. You can use it for confluence to give you a stronger confirmation, but if you just really watch and react, just pay attention to how price is reacting off of your structures, then that will give you an idea of exactly what position you need to take in the market, okay? You don't want to enter in the middle of the momentum. So let's say we had rejection here and we saw that price got long here, and then we're like, oh man, price is taking off. I better enter for a buy and just grab some quick pips. Well, that's not really smart, because you want to enter logically in an area where you could place a stop loss where you're going to minimize your loss. So for example, if we entered, I'm just going to show you, for example, let's say if we entered right here because we saw that, oh boy, price is taking off, let me get in this buy. Well, you don't really want to do that, because what if price suddenly reversed and decided it wanted to break, and then you're suddenly, 40 pips in the negative? Of course, hopefully you have a stop loss in place, but this is a better decision here, where if you wait for a buy against this structure level here, where it's respecting your trend line, so it's trending, you have support, which became resistance, okay? So you had a resistance area here that was previously support and also became resistance again. So this is also part of your confluence for an entry. You have a wick, so you have price rejection. All right, so this is a very strong entry. You could have entered right here and you could have had a nice little pip gain there. All right, so hopefully that gives you an understanding of market structure, just a basic understanding of what it is, how to identify it, how to look for a possible entry into the market. The next video, I'm going to actually go into support and resistance. I know a lot of traders have trouble really defining support and resistance, so I'm going to go really slow and break that down for you and just go through a series of videos that is going to help you to profit. So if you guys have questions, be sure to go ahead and comment on this video. If there's something you didn't understand, please go ahead and state that, and I'll be sure to break that down in the next video. I want to thank you guys for watching, and I'll see you in the next training.